morning. Steve Freed in Chicago with the morning grain comments. Well, yesterday, markets were really pushed lower on momentum trading. These AI machines tend to add to weakness, just like if we turned around and rallied, they would add to strength. And so there really isn't a lot of rhyme or reason for them selling as much as they did yesterday. But they did sell 10,000 contracts of beans, and since the first of the month, they sold 22,000 contracts. They sold 15,000 corn. Since the first of the month, they sold 56,000 contracts of corn, and they sold a little bit of wheat. They sold 46,000 contracts of wheat since the first of the month. I think the markets were expecting maybe a little bit of less weakness going into Friday's report. Although most of the trade expects the USDA to show higher June 1 corn, soybean, and wheat stocks than a year ago. Acreage-wise, we'll see how much has been switched, but if there is some acres lost in the flooding in the north, it won't show up on this report. And it might not show up for quite a while, but one group has taken 1 million acres off of corn because of the flooding. They also are using a 179 yield, which is still adequate, and using a 52 yield. In talking to our weather guy, again, you have this situation where we're starting to see some ridging in the southeast and above normal temps, similar to 1983. And in 1983, we really didn't see a change in the Midwest weather until later in the season. We'll be watching pretty closely how much rain people get in this northern area if it continues to be too much. But really, the jet stream the ridge needs to flatten out in order for the rains to stop in the northern areas and in order to see some preset move across the Midwest. Down the road, it looks like Russia, parts of the Black Sea will turn to warm and dry, while conditions across northern China plains looks to be okay with some off and on showers. We did note that northern Brazil is dry, but we'll see if that has any issues as far as logistics is concerned in moving grain out of those northern ports. As far as demand is concerned, when we look at the beans, we've got this inverse between July and Sep that's down 60 cents and $26 in meal, which suggests that there's just not enough beans moving into the pipeline to satisfy these really good crush margins. In the corn, a slight carry. In the wheat, there's a carry, suggesting that there's enough grain in the pipeline to satisfy the demand, except ethanol margins are improving, and we should see some interesting numbers today if production goes up and stocks go down. We'll be watching pretty closely some of the world veg oil prices, but for the most part, palm oil is on the defensive with exports lower than expected, and so we'll just kind of see how that plays out. Egypt yesterday was a buyer of 440,000 tons a week from Eastern Europe and Russia, and prices were on the cheap side. So we'll be watching as the markets get into the end of the week USDA report.